Good afternoon and welcome to BAI's Coffee Talk. My name is Joe Ciacia. I'm the Vice President of Sales, and today we're going to talk about how to use S2K Analytics, GMROI, and fill rate reports to better manage inventory. First off, for those of you not familiar with GMROI, it's typically called the gross margin return on investment. This is a calculation that helps you analyze your ability to turn inventory into cash above the cost of the inventory. So it looks at things like profitability, turns, inventory carrying cost, acquisition cost, and it helps you analyze this to see if this item is truly profitable. Okay, so how can it help you? Well, really, GMROI helps you ask these questions like, do I devote too much inventory to this product category? Could my vendor ship me more frequently to lower its GMROI or raise its GMROI? Is that special buy really a wise investment given how much I have to buy up front? How much can I cut prices to increase sales without lowering my GMROI in that category? So really, again, when you look at the calculation and you're looking at turns versus profitability, what the notion is that if it's a very profitable item, okay, it's okay to hang on to it and have a low number of turns, because when you do finally sell it, the profitability will make up for that carrying cost. On items with a very low profitability, you want to turn them more often so that your investment in them can be recouped very quickly with the profitability. Okay, so when you look at these and you look at these questions, it really can help you understand better. Are you carrying too much of a certain category or a certain vendor line? Is maybe in one location you're carrying too much, right? Is that special buy that the vendor said, hey, buy a truckload and we'll give you a special deal? Is that really a good deal because of the carrying cost and the profitability of that item? So it's a really nice ratio to help you analyze and bring up these questions against your inventory. So here's the calculation. So it's a simple calculation. It's gross margin percentage times the inventory turnover ratio. And I gave an example here below. I'm not going to go through it of how it's calculated, but you can look at how the calculation is done. And the bottom line is you're going to come up with a number that's either greater or less than 1. Okay? And the notion is that a number that's higher than 1, that means for every dollar you invest in that inventory, you're getting more than $1 back. Okay, for any items below 1, it's basically saying for every dollar you invest in that inventory, you're not getting $1 back. Okay, so obviously what you look at when you look at the GMROI report is you want to look for items or vendors or product lines that have a GMROI less than 1. Okay, and obviously the GMROIs, greater than 1 are also good. You might want to push that type of product, and those are really bringing you in very profitable, product lines and vendor lines and items. Okay, so just one thing about GMROI, because there's a lot of controversy on this calculation. It's not a be-all, end-all. There are obviously many reasons why you might carry a vendor's line. Maybe you have to carry a line to get, accessibility to another vendor line, or maybe a product category is you're just carrying it because it's, spare parts for another product category. So, when you look at GMROI, it's not the be-all, end-all. You really have to take a look at the vendor and the line and why you're carrying it. But it is a good red flag indication for you to at least start the analysis of that product category. Okay, so let's take a look at the GMROI report that's in S2K Analytics. So this is what it looks like. All right, and basically what you're seeing here is I ran this by vendor. So typically GMROI reports are run either by vendor line or by product division and class. You can also run it by location if you want, so that's another way you can run this. But for this example today, we're going to run this by vendor line. All right, so what you're seeing here is all the vendors, and they're calculated GMROI. So the report, let me zoom in on the report so you can see it a little better. The GMROI shows you turns, previous inventory value, your average inventory value, the sales, your percentage of overall sales. Okay, so it shows you this data, and it calculates based on that data the GMROI. And obviously you can see some of my vendors have a GMROI, above 1. There's one vendor there that has a GMROI of 3 and 2, and those are good GMROIs, meaning you're making good profitability based on your investment. But you can see I highlighted a vendor, Franklin Industries, that has a GMROI that is below 1. Okay, and it's very, very much below 1. So what you would do with this report is you would drill into that vendor line. So you would click on that vendor, and the drill-in report is going to show you by location and by division and class the GMROIs of the individual items. Okay, because maybe it's just in a certain location that you're carrying these products from this vendor that it's not really selling. Or maybe it's just a specific category of products that's not really, having a good GMROI. Okay, so if you look all the way to the right, you see the GMROI column, and let me zoom into that side of the fence. And really what you're going to see here is, although all the products are really not great as far as a GMROI calculation, there are a few that are really, really bad. Obviously, the top one, you've invested a lot of money into that inventory. Okay, and it's not turning, and the sales and gross profit is not really where it should be for that amount of investment. Okay, so when you see things like this, again, you have to think about, do I have to carry this line for a very high level customer? Can I maybe buy less of it, or turn it more, or raise my price? There's a lot of different things that you can do to help you in fixing this problem. So what should you do, right? When you have a low GMROI, and it's truly because it's not a profitable item, right? So what you want to do is, pretty much around 12 to 14 months, you want to start to discount that item heavily. You want to get rid of that item. You want to kind of unload it. Some ideas, you could double commission on it to maybe help your sales reps push it. Combine 1 and 2. And then really after 18 months, you can scrap it. And I know that's a tough pill to swallow, but companies, that do that, lower their overall costs and will have, that money back, or that investment, that area in their warehouse or whatever it may be, to, invest in products that really can move and sell. Okay. Other ideas on dead stock, just to give you some tips. Maybe you can lower the price, as we talked about, donate it to charity, taking the tax write-off. The last one, repackage it with good items, is pretty common, where you'll create a kit. You'll bundle it with a bunch of good items to try to move the slow movers, so to speak. Okay, you could also utilize the web, marketplaces like Overstock, Amazon, eBay. You could try to move the items, on those websites, or create a dead stock manager position where that person's compensated on the success of reducing the dead stock. Okay, so those are just some ideas that we pass along, some ideas that we've gotten over the years for managing dead stock inventory. Okay, so let's look at the second report that I want to talk about today, and that is the S2K Analytics fill rate report. This is a really nice report. So fill rate helps you understand how well did you satisfy a customer's demand from the stock on hand. Okay, so we look at this, we only look at what we call 00 orders, the original order. We don't look at the back orders. And we only look at items that you flagged as stock items. Obviously, non-stock items, you're not expected to have those in stock, and those are truly special order type items. So out of items that you stock, and when the order comes in, the first order comes in, the 00 order we call it, how well did you fill that demand? Okay, and getting some statistics from the National Association of Wholesale Distributors, leaders in the industry have fill rates of 98%. The average is just under 95 in the wholesale distribution space. So those are the targets that you're kind of looking for. And if you see items or vendor lines or products below that, then you really want to review it and see what's going on. Okay, so let's take a look at the fill rate report. Okay, so this is the fill rate report that you can run in S2K Analytics, and you can run this fill rate by customer. You can run it by division class. You can run it by vendor line as well. Okay, so I'm running it by customer. I want to see how well I'm filling my customers, and I'm going to zoom in here and show you this report a little closer. So here's the report. And it's showing me, how well I'm filling the original order quantities against the quantity shipped. And this is all, this is my demo, so I only have a few orders in here. But this is, all the orders for the year. When the customer placed the order, okay, how well did I ship it? And you can see on the right my fill rate percentages. And what I'm looking for, obviously, is some low fill rates. So for the most part, I'm doing, high 90s, but there is one for fine line plumbing supplies where my fill rate is below 95 and it's at a 93%. So what I'll do is I'll basically drill down into that customer, and then basically what you're going to see is a breakdown of the product division and classes that this customer purchases, right? So here's where you can see, all right, let me take a look at, maybe it's not everything I'm supplying this customer that I'm not filling at a high rate. Maybe it's just a certain line. And you can see here that is absolutely the case. It looks like under office supplies division in the class of writing instruments, that's where my low fill rate is. It's 82%. So everything else I'm actually filling pretty well for this customer, but when they order writing instruments, that's where my low fill rate is coming in. So what I would do is I would drill into writing instruments, okay, and really get down to the bottom line and look at the items now. Go down to the item level and see, what maybe it's just a specific item, and sure enough, it is. It's just the pocket highlighters. When they purchase pocket highlighters, okay, we have a 71% fill rate. The other items in this category I'm doing well on. Okay, so what would you do about this? Well, if pocket highlighters is an important item and this is an important customer, maybe you would raise your safety stock level so that your safety stock level could buffer any spikes in demand that might happen throughout the month, so that you can raise the fill rate. So you can look at this kind of stuff, and maybe this is a really good customer and you want to do that, or maybe it's a low level customer and you don't necessarily want to do that. So, but these two reports that I showed you here today can really help you in managing inventory a little more effectively. The GMROI is a really nice report that looks at your carrying costs versus your profitability and your turns, and can help you really determine what product lines and what vendor lines are really profitable. And then the fill rate report really can help you understand how well are you filling customer orders, and what to do about that to make sure that your customers are getting the products and services that they expect. Okay. So you can also run the fill rate report by vendor. I just wanted to show you that. So you can see that the same fill rate report that you just saw by customer can also be run by vendor. So, and what you're going to really see here is that if you drill down into the vendor, you're almost going to see the same thing, that where you're maybe not filling the customer orders on the customer side is really related to a vendor not having a good fill rate as well. Okay, so you can run these reports multiple different ways. Okay, and you can see I drill in to the vendor, and sure enough, it's writing instruments where they're having the same issues from a fill rate perspective on this vendor. Okay, pocket highlighters again. So you can really see that these reports can be very, very helpful in helping you analyze inventory and really perform much better on the customer service side, and make your company much more profitable. Okay. For more information on any VAI products, feel free to visit us at www.vai.net.